I know for a fact that you're saying, look, whether it's Uber or Lyft, pay for the service. Go ahead. It's great. You love it. It's so practical, right? But be skeptical of the stock. Tell us why.
Yeah, I think there's several reasons. First of all, I mean, IPOs you generally need to be cautious about here. I mean, look at what people like Warren Buffett and John Templeton have said. You know, you avoid situations where people are greedy and buy into pessimism. Of course, here with the IPOs, they're releasing them when there's an awful lot of hype here. Markets are near their all-time highs. I think one needs to be cautious just generally there. And of course, at the end of the day, you are buying stocks to make a profit here. And both these ride-hailing services have said they may never make a profit. So, you know, that's a cautionary flag too. And of course, we just saw what happened with Lyft, where it's down nearly 20% from the price that everyone just clamored to buy. So, yeah, there's reasons for caution, even with Uber too, despite its greater size than Lyft.
And yet, David, the market seems to be giving such businesses a premium. I mean, look what's happening with Netflix. You know, they are building on their subscriber base. We just heard from the Disney CEO as well that they have some idea of economic viability down the line. But the markets don't seem to care. The stock of Netflix is actually up 35% from a year-to-date perspective, has risen more than that, actually. Is cash flow the new measure of value with these new age businesses? So, you know, in that P and E, it doesn't matter whether you have the E as long as the price reflects the scope of expansion.
Well, you know, I think that's well put. I think the way you can reconcile all this is the potential for profitability down the road. I know as a user that Uber charges a large premium over Lyft. You know, at a certain point, of course, it can just crank down the pricing, drive Lyft right out of business, and then take the prices right back up. At a certain point, of course, a lot of taxi cab drivers are going to go by the wayside, and they can bring the prices right up. So I think there's a lot of latent pricing power. Plus, of course, we're just still looking at, for example, Uber quite narrowly, the brand extensions into delivering not just people, but into services is really enormous. The transportation, of course, and of course, they're not just in the United States and Canada like Lyft, but they have their tentacles all over the world, Latin America and Europe in particular. Of course, the really interesting thing here is Lyft. The money that was raised was put into the pockets of some of the early investors. Uber's taking the money it's raising and putting it into autonomous driving technologies. That could be the holy grail down the road. So ultimately, you have to think not about are they making money today, but the potential to make a lot of money down the road.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.